Okay, hey everyone, it's iamyourcryptonite, and today we're covering Loot Project, small caps, and more. So, let's get started. So, the big news this week was the Loot Project, which we're going to be covering, and then what we're also going to be covering is stacks, McDex. Honestly, I've read through this and I still don't understand what it is, duck battle, and large caps. And then beyond that, we're going to give you some advice about e-commerce and the macro scene. And our number 4 topic is regular tech investing update. So let's start off with number 1, Loot Project. In case you guys haven't heard what Loot was, so this is what happened with Loot Project. This person said, yo, you can mint this NFT project for free, and it's just a bunch of text files. And within these text files, a bunch of these original people who got this NFT drop then decided to build a world with whatever the text files contain in them, and it's very interesting things like shoes, jewelry, stuff for battle, interesting stuff. And in the past 6-ish days since I'm filming this, the ecosystem has increased really drastically, and the floor price for any of the original loot holders is 8 ETH, which is 40k or something like that. It's pretty crazy. And then you have all these interesting NFT airdrop to these holders of the original loot bags. So basically, what's really interesting about this project too is that Vitalik said Loot Project is really cool. So a lot of people became very bullish on Loot too because of that. Aībᴏᴜᴜᴛ then explains the economics from their side about how to get in on Loot, how to cash out on Loot, and I'm just gonna scroll past because honestly, I don't know if this information is even going to be relevant to anyone watching, but if you're interested in watching it, you can probably find more info on Crypto Twitter. If you're even interested at all, you probably are part of Crypto Twitter already. Okay, let's head out to number 2. Topic number 2 is about stacks, McDex, duck battle, and large caps. So number 1, let's cover stacks. The project is continuing to grow and is honestly doing better than we expected at this point, while some of the stuff is paste. So Aībᴏᴜᴜᴜ also does random typos to make sure that you're looking at it, because apparently it catches more attention than if it was perfectly clear copy. So it's proving that it's possible to develop smart contracts for Bitcoin. This is very interesting and very new. In additional important news, Muneeb noted that Coinbase custody also allows for Bitcoin yield. This was September 2nd, also very relatively new. So pricing in terms of Bitcoin continues to be solid and does not include all of the stacking rewards. Since the project is doing well, we don't have any plans to cut or reduce. We're going to wait and see how much activity is occurring on the project before deciding if we add or not. As a way to take profits, we'd simply take your stacking rewards, pay it out in Bitcoin, 10 to 30% depending on how you did it, and keep that Bitcoin for mental health. Yes, this is serious, as euphoria and greed can lead to poor decision making. Altus note, while mentioned a few times, yes, we did go ahead and pick up a stacks punk since they were only $15 at the time and now the floor is $60 or so. We don't consider this to be a significant amount of money, and we threw the value into the other category of the NFT portfolio. So what does stacks need to do? They should focus on building off of the Bitcoin community. So stacks should start thinking about the new contracts and capabilities that Bitcoin owners would want, and the more that they engage with Bitcoin maximalists, the better. Okay, I'm not sure how far deep stacks is going into that, but they should definitely start doing that, is what Aībᴏᴜᴜ is recommending. So I have no idea what this is. I feel like this is the first time I'm looking at it. It's associated with Arbitrum. The MCDEX v3 beta is out with reduced fees and up to 25x leverage. Per usual, we do not recommend trading with any leverage. You will get wiped out. This is not a contradiction. If you want to be involved in gambling business, you want to be the casino bookie, not the degenerate gambler trader. For an idea of how degenerate this can get, let's look at one of the first highlights from the press release. In the USDC pool, you can trade 500 ETH or 40 Bitcoin without any slippage with 6 mil liquidity. I'm going to be honest, I have no idea what any of that meant. I've no idea. We're just scrolling past this. At this point, we're close to 3x on this, not quite at $45 or $46. So at this point, we might consider cutting 33% of the stake. If someone is new, we continue to suggest cutting in half after any 100% run up. So also, I'm just going to say again, this is the first time I'm reading them and I see this. This might be the second time. I'm going to go back into their previous articles and see what they've said so that I don't miss any more of this for y'all. Okay, now, so I think in previous video I showed the beef that Aībᴏᴜᴜ has with Duck. So this is just more about their beef. We submitted our edits to the project anonymously through some people here and said they didn't listen to anything. We had to say and change the interest rate to 10% since we're not in the game of convincing people of anything. We've contacted other projects to bring our proposals in. Okay, so let's move on to large cap. Basically, they still have beef with Duck Protocol, Exchange, I don't know, Duck Unit, something. Large caps. Consistent with Wednesday, still believe ETH is a better one to add to right now. We're watching the exchange numbers, and number one, ETH is still seeing significant declines, coins coming off of exchange. And number two, Bitcoin has been relatively flat. And number three, given the monopoly of Link, expects this to continue to grind up. Of the three, we'll stick with ETH if you force us to choose between the three. VCs need ETH for NFTs DeFi. As we mentioned in the past, the DeFi funds were raised and attention moved a bit to NFTs Q4 timeframe. Most NFTs 50 to 80% oversubscribed. Effectively, ETH is in a good spot for two different reasons. Number one, big money needs to buy it to participate in the NFT craze. And number two, if there's a lull or downside to the NFT market, ETH should go up in value. Okay, so number three, let's tackle e-commerce and the macro picture. So Q3 was not good for e-commerce, and anyone still selling in-person events such as concerts are struggling. I've definitely seen concerts being canceled on my end. And it's also so crazy to me that people are still going to school. That's why. So what does this mean? It means that the money has to be printed infrastructure bills, for example, and it means that people are becoming more and more accustomed to working from home. You can feel the tension in the air within major cities. People are on edge. Yeah, we don't have any space to go out, except for myself. I'm in the middle of a country. Let's take a look at these short positions. Any of these don't have a need for middle managers, and they'll be slashed rapidly, and you've already seen it in Q3. There's just no major announcement yet. It will continue. So this is what your takeaway for this. The following major trends is what you should expect to see, ideally take advantage of well. Number one is the big trend is psychology and life consulting. People are looking for answers. So there's tarot cards, oracles, crystals, mental health, finding themselves, anything relating to a loss of meaning, and many high-paying professionals tie their identity and their status within the corporate world, and that will erode their ego, and it's going to put it into bad shape. So while this isn't an anonymous business, it is by far with the most growth potential over the next 2 to 3 years. Yeah, I agree. Nobody knows the answers, and a lot of people will pay money so that someone else just tells them what to do, so they feel less scared. It's fear. Restaurants and real estate will have a lot of major structural changes, and it's a huge industry with loss of meaning in society. So number two is a big market in technology training. At this point, you could probably start a blockchain crypto hand-holding event. TBH, I'm thinking about doing this. It just makes sense, and then you get to interact with people's questions in real time. I think teaching is like the best way to learn. This means that you're dealing with complete not gonna make it. Explaining how to set up a crypto wallet hardware, explaining how to use a decentralized exchange, and explaining how to do basic tasks like sign a transaction. I'm actually kind of surprised there's not like this university that you can go through to be certified for consumer crypto stuff. Like, I'm not talking about fundamentals of blockchain or those any like crappy Coursera courses that are offered. I'm sure some of them are very good. But I mean, this is how you use something in real time. This is the monthly or bi-weekly class that you go to stay updated, and this is a cohort of students, and you guys can all like text each other. Everyone just kind of does their own thing so far. So, if you're laughing at this idea, it means that you're underestimating how early you are. Once again, we're extremely early, and this same business was spawned in the early days of the internet. People would quite literally pay to learn how to use stuff like America Online and Microsoft. I have no idea what America Online is. As a note, while the market would be big, you should assume that it will be a 2 to 3 year sprint of high revenue and fall off. It's a strange form of education training where once the install base understands the gist, there is no real need to continue learning. Yeah, so that's why I say like you meet weekly or like bi-monthly. Things move really fast, and for the most part, people are curious. They're probably going to do their own research. Number 3. Video game training camps. This is finally starting to heat up. This is very interesting, even though I myself don't play video games. With a slow and steady gaining hype cycle entering crypto, there will be big money in video game training. Imagine a 15 to 20-year-old kid being able to earn money while playing any game. They already sat in front of a computer for 8 hours a day playing games like StarCraft, World of Warcraft, Fortnite, and more for free. So imagine they can earn tiny amounts of money to play. They'll be hooked for good. So this is where you come in, younger audience. Learn everything you can about major games and become proficient enough to train other people to be good as well. While you think we're kidding, we're not. The regular world of sports now has a real competitor in esports. The difference, the esports market's global. I feel kind of old, even though I'm not. But yeah, I hope any teenagers who happen to see this and are interested in video games, take a look at this. But I know, I'm probably not. I'm not as fun anymore. Autist note. Some of comments have come in suggesting that the only business we should discuss need to be anonymous. This is a bit of an extreme belief, especially since you can have another person act as the face of the franchise. So I was a bit confused when I first read this the first time, but basically you don't need to be completely anonymous. Someone else just could be more famous than you. So for example, more people recognize the now disgraced Jared from Subway when compared to the CEO or CFO of Subway. There are many fitness looks and industries that capitalize on the same idea. If you are in the looks-based industry of beauty, you should certainly find the most attractive person to be the face of the firm company. So there are many smart ways to work around this. People who suggest that it is impossible or putting the cart in front of the horse. If you get big enough to make good money, more than mid six figures in US dollars, you can easily afford to have someone else be the face of the franchise. Anything at 150K or below, you don't have enough scale for fame to impact you. So number 4 is regular tech investing update. We haven't seen a big reason to change our traditional portfolio. If you look at it, we're heavy in tech and own some stuff we know nothing about, which includes healthcare and the S&P 500. This is diversification, and our general belief is that your financial independence portfolio should be diversified. This prevents you from having to start over again in the future. Hopefully you don't completely mess up. So we're getting confidence in a few things that we believe in. Number 1 is video games. Number 2 is graphics processing scaling. And number 3 is using MicroStrategy as a lever play on Bitcoin versus investing in something like Coinbase, which also has a regulation risk. So let's talk about video games. Video games is surely going to take over the way young people live. It's only a matter of time. Toy industry professionals are even coming around to AR/VR capabilities when compared to virtual experiences. Plastics and physical toys are horrible for the environment. That's an easy marketing angle. That's definitely an easy marketing angle because occasionally I stumble across mom talk, even though I'm nowhere close to being a mom. I stumble across mom talk and I see rants about why using plastic toys is so bad for a child's development versus using wooden toys. And the marketing angle about how they're horrible for the environment is definitely come up. And they can cause actual damage to kids, eat them and slip on them, etc. So the toy industry will slowly but surely take their brand into the VR world. Imagine a kid being able to interact with a VR version of Sesame Street, for example. Amazing. GPU scaling. While we only follow the crypto side, this is apparently a bigger market than we originally thought. AMD and Nvidia are absolute must-owns at this point. AMD recently hit all-time highs due to a huge blowout Q2 earnings report and positive news around another Chinese approval of a major tech company acquisition. Wow. Yeah, that's crazy. We'll see if an individual position is warranted beyond the SMH index. I don't know what the SMH index is. That shake my head index. At this point, we're being honest and saying we simply don't know enough about it. We do know that GPUs are being used for AI, VR, AR, and we don't know much about these and how much they should be worth. So, in this time, we'll look at these two stocks in terms of individual holding, AMD and Nvidia. So let's talk about equity crypto investing. While some have a position in MicroStrategy, we're becoming more convinced that this is a better way to invest in Bitcoin in traditional markets, and the reason is simple: regulation. Coinbase and other centralized platforms are easiest targets for regulation, unlike MicroStrategy, who simply levers up to buy. Can you imagine the amount of money coming in and out that's likely tied to tax avoidance? We don't even want to know. And as a network of Bitcoin and ETH grow, every single coin is going to have some touch to a bad address or a blacklisted XYZ issue. And that's a regulatory nightmare. Regulatory nightmares cost a lot of money. We anticipate more and more regulation on institutional distribution of research as well. So over the next 12 months, people who are pumping their bags will have to disclose their positions. Therefore, all the pseudo-anons will be forced to disclose their wallets since they already signed their names over to the VC. I have no idea what HFs are. They're doing consulting work for special, meaning for bag pumping. So in a sentence, expect more forced disclosures for big honeypots, VCs, HFs, institutional research, and exchanges. Exchanges are the most susceptible to profit margin risk. Printing 50 to 60% operating margins in an unregulated industry while people are still recovering from COVID is simply not a good setup for 12 months. Autist note, you can be near certain that new regulations are coming, and knowing this, you can go through all public companies with regulatory risk and cross them off the list of investments, assuming you agree with our prediction. Okay, this is a little bit more about Bowtie Bull's own personal community building. I'm just going to skip this part for now because I feel like it is repetitive at this point because my last few videos have covered basically the exact same information. But what is interesting is they have a quick calendar events. Number 1 is September 6th. They have a guest writer on Miami Coin, and we're only involved with stacks, not Miami Coin for full disclosure. Number 2, September 7th, we hope to have an entertaining promotion. We have planned a successful at worst. You guys get a good laugh. Number 3, we're going to do a scrape of people in the jungle end of month to see if someone can help us with some marketing, SEO, other scaling strategies. So finally, we also have some e-com and traditional investing info later this month as well. The NFT, DeFi, crypto world has been insane, and it's good to keep your eyes on the prize. Number 1, career and internet biz, and then number 2, purchase as much high tech as possible. All right, again, if you wanted to ask Bowtie Bull any questions, you need to subscribe to them. Otherwise, this is the most that you're getting. Again, I highly recommend subscribing to them. They've been super pivotal in my understanding of crypto and my crypto journey and understanding macro trends and not getting too caught up in the crypto world details that honestly don't matter because new tech is coming out all the time and communities die all the time. So, yeah, I'll see you guys in my next video, and click subscribe to get the newest video as soon as it drops.